Good morning, everyone. Great to see you all. I'm Sam Gabita, Ventures Director at OGCI Climate Investments. We're a billion-dollar fund focused on sustainability, specifically to decarbonize energy, industrials, and commercial transportation. I wish we could be seeing you all in Long Beach. I have a favorite burrito place that we could all go to after this panel. Unfortunately, it's not happening this year. But we've got a great panel here to talk about the ecosystem around jumpstarting advanced clean fleets, and specifically how do venture capitalists, entrepreneurs, and the government work together, as we have in many instances in California, to advance what we all feel is an exciting place to be, and that is clean fleets. So with that, I'd love to introduce our panel. I will go left to right on Zoom. So I will start with Brook. Brook Porter.
Great, thanks, Sam. It's great to be here, and this is a fantastic panel. Really looking forward to the discussion today. Quick background: I'm currently at a venture firm that I started with 3 other partners called G2VP. We spun out of another venture firm in Silicon Valley called Kleiner Perkins, where we managed a fund, a billion-dollar fund focused on disruption of traditional industries called the Green Growth Fund for about 10 years together. Prior to that, I was an entrepreneur in transportation for 10 years, actually started 2 companies in the Long Beach area. So shout out to the local startup community there. But after having worked in transportation as an entrepreneur, I then transitioned to being a venture capitalist and started a number of investment initiatives at Kleiner Perkins around transportation. And now at G2, we invest in similar megatrends. So we're looking at opportunities in everything from sharing and connectivity to electrification and autonomy. We invested throughout that time frame in companies like Uber, Proterra, Turo, ChargePoint, Telogis, Scoop, Shift, and Luminar, just to name a few. So we've looked at a lot of different trends over the years, and it's a really exciting time to be looking at opportunities in transportation. We're generally a later stage fund. We're a $350 million fund. So we're sort of late venture, early growth stage, really looking at companies just entering their commercialization phase. So we look for sound business fundamentals, growth, and solid margin profiles, et cetera. So looking forward to the discussion today. I think there's a lot of great content around the table. So excited for what's to come here.
Thanks, Brooke. Patty, if you wouldn't mind going next.
Sure. Thanks, Sam. Well, it's a pleasure to be here. I think I am the token state government person on this panel, but from the nation state of California, so a good place to be from. I've been a commissioner at the California Energy Commission now for about a year. I was appointed by Governor Newsom last April, and I am super excited to be working in California. Before that, I was working for a foundation called the Energy Foundation that works in the U.S. and China on accelerating a clean energy economy. I was a transportation program director there, and I had about another 15-ish years before that, also in transportation at a nonprofit called the Union of Concerned Scientists. So I have a lot of years working on transportation, and I really wanted to come to California to work on transportation because it's ground zero. Like, if we can't bend the curve in California, we can't do it anywhere. We have the companies here, we have the government will, we have investment flowing, and I think we have a real opportunity to bend the curve on transportation pollution and set a course for zero or near zero.
Terrific. Thank you, Patty. Alden, if you could introduce yourself.
Hi, good morning. My name is Alden Woodrow. I am the co-founder and CEO of a company called Ike. We are based in San Francisco, and the company's existed for about 2 years. Ike is building automation technology for heavy-duty trucks. So we're focused on automating the movement of goods on highways, and I think we may talk more about that specifically today. I personally have spent a lot of time building new technologies here in Silicon Valley. Prior to Ike, I worked at Uber on trucks as well. and at Google and at a couple of startups prior to that. This event has a special place in my heart because some of my time prior to focusing on transportation was in renewable energy. I worked on a wind energy technology for a number of years. And prior to that was an environmental consultant and worked with organizations like the Energy Foundation on a number of different topics. So although we're focused on automation and on diesel vehicles today, there's a number of things I think we're going to talk about that I've had exposure to over the years, and that I'm excited to kind of plug back into and learn more about, in addition to providing maybe some insight on how we're thinking about the technology we're building and how it can help contribute to making California and the country cleaner and more efficient.
Fantastic, fantastic. So excited to be on this panel with you. I will apologize in advance for the controversial questions, which will definitely offend at least one of you, if not all three of you. But let me start off with a bit of a backdrop question. Many of us have been coming to ACT for years and years. I think at some point, I remember being one of the only investors walking around looking at all these giant garbage trucks and thinking, this is so cool. The world has changed. People are now aware of what's happening in the fleet market as it relates to decarbonizing, things being more connected, and certainly, hopefully, autonomous at some point in time. So one of the questions I have for each of you is, we've seen hundreds of millions of dollars invested at many different stages, from seed all the way now to our favorite 2020 word besides COVID, which is SPAC. And lots of things have happened in the last 5 years in particular. So I'd love to hear from each of you. Why now? What do you see, given your historical participation in these sectors, as driving some of this recent investment? And maybe I'll start with Brook and then kind of go back around. So Brook, what are your thoughts there?
Yeah, it's a great question, and so much has changed, in the last couple of decades. When I first got into this industry in the early 2000s, late 90s, batteries didn't even seem like they had a shot at all, and I ended up starting a fuel cell company as a result, because batteries didn't seem like they had much hope, particularly for things like trucks and heavy duty. To me, and we'll talk about all the mega trends. I'll let some of the others talk to, especially Alden, talk to autonomy and sensors. But just to connect it into the energy discussion and common thread here on the table, I think the big trends are renewable energy is on its way to being essentially free, and lithium-ion battery cost curves have just come down incredibly, 85% in less than the last 10 years. So those two things are kind of I think the foundation that enable a lot of innovation to happen. It's usually, pattern matching in Silicon Valley and venture investing, that there's a convergence of technologies that really results in the biggest disruptions. And I think that's what's happening in transportation, and more specifically, even in fleets and heavy duty, where you're seeing enabling electric technologies, and the scale up of the Teslas of the world, the renewable energy price curve. Renewable energy is now by far the cheapest form of generating electricity. And then, of course, all of the connectivity tools and sensor tools that enable new modalities like autonomous and ADAS systems. So that's changed dramatically in the last 5 years, and we're starting to see all kinds of uncoupling and disruption happen as a result.
Yeah, absolutely. Patty, I'm curious from a government standpoint, and you started at UCS and now you're at the CEC, but what do you see as you look at the ecosystem and sort of the explosion of activity that's happened? What's your perspective on the CEC's role and the government's role in sort of helping this occur?
Well, I'm going to step back and then I'll dive into the CEC's role. But just from a global perspective, I mean, we're seeing countries around the world announcing the drop dead dates for the internal combustion engine. Mm-hmm. And 10 countries have announced that they're going to either ban or all new sales must be electric by a date certain, and that includes China, Germany, India, so some of the biggest markets in the world. The United States is not in that list yet, but California did just pass the world's first zero-emission truck regulation. So, I mean, California has announced we're not going to have any more heavy-duty, medium and heavy-duty vehicles. All have to be, new sales have to be electric by 2045. So the commitment in California runs deep to making sure that we can meet our climate and clean air goals. And zero-emission vehicles are a key strategy to do that. I think Brook did a great job setting up how EVs and cost curves have really, lithium-ion battery price drops are phenomenal, and they're on track for in the next 5 to 10 years for most vehicle segments in the light-duty passenger vehicle market, at least, to be cheaper. Batteries should be cheaper on the vehicle, let alone the life cycle cost. So that's just dramatic. It's kind of like hard to believe, honestly. Like those of us in the transportation world would look enviously at the solar electricity world in terms of the price drop that we saw in solar. And then you see that same price drop now on batteries. And again, China, which was a big force in solar, is also a big force when it comes to that battery price drop. So global investment is flowing, which is part of my optimism around, we'll really be able to see some profound changes. And, not just, as Brook and Alden have said, not just in terms of electrification, but also autonomy, mobility as a service, connectivity. In July of this year, Tesla became the most valuable car company in the world, which is shocking. You could argue how durable that is, but I mean, it is undeniable that they have rocked the world of kind of the staid view of automakers and shown that, electric vehicles could not just be good, but better than internal combustion. So it's just that, so much market transformation. And I think California undeniably has the deepest commitment to zero-emission vehicles of any government in the world. This has been going on for 40 years, 40 years. So long before there were battery electric vehicles, California has said, hey, we need zero-emission vehicles because we cannot meet our air quality targets without it. Now we don't just have the driver of air quality and public health, we also have carbon pollution as a driver. So I just think this commitment that the state and other governments have around the world to making sure that we have a cleaner future for our kids is a big part of the reason that investment is flowing.
Yeah, well said, well said. And you do have to remind us that it's been 40 years of involvement in California, so that is absolutely right. Alden, how do you see it? You've had a great history in our ecosystem here, and what do you think has been driving some of the most recent activity?
Yeah, I think it's a really interesting time, and I want to take us back about 20 years and just make a reference that I think everybody on this panel will get, and talk a little bit about how I think it is a useful framework to think about where things are now. So those of us who are around in the late 90s, early 2000s remember a number of companies, and the one I'll reference is Cosmo.com, that was doing delivery of convenience store goods to people's homes. That at the time, after the .com bust, I think was sort of a joke or a bit of a laughing stock. But in general, I think the lesson there was that was a good idea that was maybe too early. There are a number of other examples. And I think where we're at today is a good example of a lot of hard-earned experience in a number of these new technologies over the last number of years. So I think, again, everybody on this call has had some exposure and experience with the clean tech boom of the 2000s. I worked at a startup in 2010 to 2013 that was trying to do a very, very ambitious development of a new hardware wind energy technology. And I think in some ways we were sort of too early for that. And the lesson there, I think, has been investors like Brook, who have been in the mix on this stuff for many years, have really learned a lot about what sorts of businesses, what sort of technology efforts are likely to be successful in a venture context, right? And which ones are not. And so I think that hard-earned experience is quite valuable. Another evolution that I think we're at now, and we see this quite a lot for my team and the co-founders of my company, is kind of an evolution from a consumer focus to an enterprise focus. So in automation, for example, a lot of the excitement around robot vehicles 10 years ago was in cars, and that's still true to a large degree, but many of us have discovered how valuable and compelling automation for heavy duty vehicles is, and the enterprise opportunity there, the value of productivity and efficiency compared to the value of convenience in the case of passenger vehicles. My co-founders and I saw eye to eye about that in 2016 when we first started working on trucks, and got very excited about fleet operations, right? And how well that industry is suited to adopt some of these technologies. And then I think the last one, which Patty has already touched on, and Brook as well to a large degree, is what seems to me, especially in Silicon Valley, as a kind of renewed commitment and interest in climate change. That again, in 2010, we had a lot of people who were, or even prior to that, going to the Copenhagen events, a lot of people who were really enthusiastic about that as a chance to really change things. And I think that dipped off in the middle of the last decade. And I know so many people now in my network coming out of tech companies or of startups who have gotten really enthusiastic about trying to build companies or new technologies to try to make a dent on climate change. And that is another kind of new wave that I think is coming right now. So that's very exciting. On our end specifically, there's also this interesting phenomenon, which I think applies in a few other places, around the technology evolving to the right point. So one thing we may talk about is automation as a whole. So the idea of a truck driving down the road without a driver, that is not ready. We do not have a product today. We have many more years of work to do, but a lot of the enabling components are now available. If you think about things like GPUs and new sensors that need to exist in order to enable that technology, those are now coming together. There's been a huge amount of investment in those components and those technologies, and that's kind of helping set the stage, I think, to apply a lot of the hard-earned experience that I just referenced. So it does feel like this is a pretty unique moment in time, and we're pretty excited about where things are headed in the coming years.
Yeah, great comments. And I think the only thing I would add here in terms of changes that have been driving some of this recent activity, Alden mentioned, the renewed emphasis on climate. And I would say, and Brook, all of you will remember this actually, when we started investing in clean tech in the mid 2000s, there was resource scarcity. That was the fear. We're going to run out of oil, we're going to run out of natural gas, we're going to run out of all of these things, and we need to substitute it with something else. And then, this lovely little black swan called shale gas showed up on our doorstep in North America and changed lots of things and made conventional energy very cheap. And so I think in spite of that, or perhaps because of that, things have come back around. The other thing that maybe some of us don't want to highlight, but is obvious, I think, is there's just a lot of capital out there now. What Brook and I and others used to think was a sizable growth round is a drop in the bucket these days. And so the world is awash in capital, and I think for us that bodes really well, quite frankly. So I think that's also just worth noting. But let me keep going here in terms of other thoughts and questions, and maybe I'll start with Patty on this one. Patty, so you're part of a very forward-leaning government agency that has done a lot around incentives and been pretty thoughtful about the goals that the agency is trying to achieve. How do you, in your role there, think about bang for the buck? And is it in a taxpayer context? Is it in an impact context? How do you think about that?
Well, yeah, you're absolutely right. We have to be very judicious when we're spending public dollars. I mean, we can't willy-nilly throw spaghetti on the wall, see what sticks, and then keep investing. So we have to be really strategic and targeted. And we're looking at, we have these very aggressive goals. We need to have a carbon neutral economy by 2045, a 100% clean energy grid by 2045, and we have specific goals around zero emission vehicle infrastructure and deployment. So we're targeting our funds at the Energy Commission. We're really focused on the vehicle and distribution. On the fuels and distribution side. The Air Resources Board, which is our our partner agency that carries the big stick, has been more focused on the vehicle incentives side. And, you know, our goal when it comes to investing in, say, charging infrastructure or hydrogen distribution is to create the conditions for the private market to flourish. Right now, we can't. You are not making money selling hydrogen in California. You are not, it's very difficult unless you have advertising or something else to supplement to make money with EV charging. We just don't have enough battery electric vehicles. We don't have enough fuel cell electric vehicles. So in this very early stage, I feel like the role of government is profoundly foundational, I would say, to the market eventually being able to flourish and take off. And it really is a matter of scale. Like as soon as we have, by God, once we have enough battery electric and fuel cell electric vehicles, that private market should take over. But in this early stage, it's a big factor, you know, just being able to find a place to charge a vehicle when you're running out of battery juice is critical. I always like to say that there are three major barriers to getting to an electric vehicle future: cost, convenience, and consumer awareness. And we, when I say we, the state of California is investing in all three. So cost, let's reduce the cost of these vehicles by giving fiscal incentives for the purchase of them. Let's improve the convenience by making sure that there is an infrastructure out there that is readily available for you to refuel your zero-emission vehicle. And then we need to build up consumer awareness of these vehicles. Right now, people don't even know what an electric vehicle necessarily is. They think maybe it's a Prius, you know. So there's just a lot of work that needs to be done to expose people to zero-emission vehicles. We're also really focusing in on equity and making sure that disadvantaged and low-income communities benefit from this transition. And this is where, I mean, medium and heavy duty, there's lots of reasons to electrify medium and heavy duty vehicles, but one of the most important is that communities that are facing disproportionate amounts of air pollution and harmful impacts from that air pollution will benefit from that transition. So we're leaning in also on transit bus electrification, making sure that there's infrastructure to refuel buses and other heavy duty vehicles. Again, I think that until the market is self-sustaining, we will need government support.
Yeah, so helpful context, and I'll maybe mold it into my next question for the group to start participating. So from Brook and Alden's standpoint, how do you see the government playing a role here, and to what extent are you in front of it? To what extent are you following it? Maybe Brook, you want to start, and Alden, you know, given the regulatory piece around autonomous, it'd be great to hear your thoughts on that as well.
Yeah, so I'll throw out a couple just almost cliche statements. I think at this point, like fundamentally, I think government's role is to sort of set the rules, but not to pick the winners. So I think that's always a very easy thing to say and a hard thing to actually do. But we could start a debate around hydrogen versus batteries and what the economic viability of one is versus the other over some period of time. And, that'd be a fun debate. But just to round out the question, I think consistency and predictability in regulations are also really, really important. And I lived this, maybe 10 or 15 years ago when the low carbon fuel standard was just getting rolled out. We did a bunch of analysis and thought, oh, wow, there's going to be a huge crunch in terms of availability of carbon credits. It's going to drive the price way up and all these other things will become economically viable. And I ran around and tried to pitch big oil companies and biofuel producers on this. And no one really got it. It seemed kind of policy wonky talk. And it became very hard to get long-term offtakes that you could underwrite the regulations stability and predictability to get those projects off the ground. And lo and behold, and I had some very direct conversations with, let's just say large oil company, policy folks that said, look, it's cheaper for us to lobby these rules than to actually comply. It's just an economic trade-off. And I couldn't believe they said that. And then, I came back to CARB and said, yeah, these guys aren't going to follow these rules. They're just going to lobby their way out of them. My perspective was, CARB and other organizations didn't seem too worried about that. That wasn't their role to worry about what the private sector was thinking or doing. They said, we're going to set the rules and let the market react. But what ended up happening is a lot of those rules got pushed out, and then the market loses faith in the predictability of those rules. And I bring that up because, we're kind of in a similar situation. And even in the last week, I've looked at carbon, trading business plans, predicting, shortage of supply and certain prices. LCFS is at $200 a ton right now. That means a lot of stuff should be viable. But as an investor, I have to write that completely off because I have, it's sad but true that you can't put much faith in those things because, look at the Paris Agreement, COP21. It's sad that these things are hard to be stable, but I'll just reinforce that from an investor's perspective, it does end up being very hard to underwrite some of these rules and regulations. The biggest recommendation that I have, or the biggest thing I think that government can pay attention to, and I think there's an opportunity to do better than we have in the past, is to understand what's working and help catalyze what's already happening. It's much easier to accelerate a curve that's already happening than to jump onto some new curve. Because oftentimes that just doesn't happen. That's not what ends up happening. It's not like, whether it's the solar curve, there are all these alternative solar technologies that could have been better. None of them won. They should have been, theoretically could have been, they weren't. Lithium ion, there's all kinds of other battery chemistries that could have been better. They're not going to win. It's just going to be more lithium ion. When you see trends of things that are working, I think that's where a government can just play a role in helping accelerate those things. The economics of electric buses are already compelling. I just do more of those things. And I think that's where California's done a great job. The ICT rule, all of these clean fleet rules are great, not because they're just great on their own, but it's already happening. The economics are already there. You can pencil it out and defend it. And that helps accelerate that transition with great regulation. And so that's the thing that I love to see when those two things align. When they're a little bit disjointed, I get a little worried because it sets the market up for kind of disruption or failure or investments that are going to fail, and it can take a long time to recover from those things.
Yep. No, well said. Well said. Alden, anything you want to add to that?
Yeah, maybe just a sort of slightly different perspective given the technology that I focus on, or maybe a slightly different angle. So we get asked, as you can imagine, all the time about the regulatory implications of automation. Mm-hmm. We're a California-based company. Our operations are here, our team is here, and so we're believers in investing in doing this in California, at least to a large degree. And so we have a lot of interface with a number of different policymakers and regulators. My background is in product management. That's where I've spent time over the years, and almost entirely in building new technologies, going from 0 to 1, as they say. And the challenges associated with that are you have to go and talk to regulators who take their jobs very seriously for good reasons, and who feel that they're working in the public interest. You have to talk to them about a technology that does not yet exist, mm-hmm. right? And it can be difficult at times to make a case for, several years in the future, this is what we're envisioning, especially because many of those people are dealing with serious issues they need to address today, right, that are much higher priority. So to use an example from my past working on this flying wind turbine technology that I mentioned before, we used to go into the FAA all the time in Washington, D.C., and they were always very kind and welcoming of us. And we would explain how our flying wind turbine was going to generate all this power at very low cost. And they would sort of pat us on the shoulder and say, like, okay, good luck with that. Like, we're going to go back to trying to keep the airways safe, right? So we run into that all the time. But I do think it's, no matter what technology you're working on, it's critically important to be very directly engaged with relevant regulatory stakeholders, right? It's important to build relationships there to help them understand where you're coming from. I think too often Silicon Valley, as a sort of general industry, thinks of regulators and policymakers as obstacles to success, as opposed to collaborators and partners. Yep. And I've been really pleasantly, well, not surprised, but I've been pleased to find over the years, as we've interacted with the FAA and California Highway Patrol and and states and counties and local jurisdictions how serious about their jobs these folks are. They are working in the public interest, and they care very deeply about doing the right thing. And so it's actually possible to collaborate as long as you can find common ground about where the public interest is, right? And so in our case, the issues tend to be more around safety and less around economics or adoption. So that's a place where we spend quite a lot of time. But we've always been really impressed with the commitment and the interest in collaboration from a number of regulators we interact with. As I mentioned, I think with respect to California specifically, since that's where we all are right now, even virtually, from an automation standpoint, there's already quite a valuable, I think, and well-intentioned framework for automation in California, right? Like passenger car, self-driving cars, light-duty trucks, in other words, sort of delivery vehicles. The framework is already in place. The framework for heavy-duty vehicles is coming, and so we're investing in that and trying to help make sure that it works well. And then the last thing I'll mention that I think is maybe slightly more relevant to this broader conversation is we think of the technology we're building, automation for trucks on highways, as being very complementary to the state's clean energy and clean transportation goals. And maybe I'll just say what I mean by that for a second. So what Ike is building is technology that allows tractor trailers to drive on the highway without a driver. And we're focused entirely on highway driving because that is a much simpler and more straightforward operational design domain. Now it's still very challenging, but it's we think 10 or 100 times easier than having a truck navigate surface streets or industrial yards, which we've learned over the years are very, very complex and difficult environments. So why does that matter for clean transportation? Well, our intention is to have automated trucks without drivers that drive over long distances on the highway and hand their loads off to trucks driven by truck drivers. And so what that means is that actually a lot of the vehicle miles that are spent sitting in traffic on the outskirts of cities, moving around on surface streets, idling in industrial yards, there's great potential for those to be powered by clean technologies, either electric vehicles or other things. The duty cycle of that application is a really nice fit for EVs or other sources of fuel. Now, we're excited also about long distance transportation, Class 8 trucks being powered by batteries over time. That will be, I think, a little ways away still. But even in the short term, we think there's an opportunity to actually pretty significantly reduce emissions associated with goods movement by virtue of this handoff model. And that also happens to be a great fit for the technical and commercialization goals we have. And we can maybe get to this in this conversation, but it also happens to be pretty complementary to truck driver jobs as well. And so it's a really interesting combination of things that I think matches up really nicely. And we're very excited about the California electrification rules for heavy duty trucks that Patty mentioned before. Still a ways off, but I think something that's going to work really nicely and be complementary to our technology.
Yeah, fantastic. Fantastic. And I think many people know this, but truck drivers used to be sort of the modal job in most states, right? So there's a socioeconomic aspect to all of this as well.
It still is actually the modal job in a lot of states. Yeah.
So you started talking about Class 8 and heavy duty, and we do have an audience question. Somebody who's very obnoxious has asked us, will we ever see the investment in hydrogen that we see in the EVs in the US? Why aren't US investors paying attention like they are in Europe and China? So let's spin through this one relatively quickly, because I think California, Patty should definitely talk about the hydrogen fueling infrastructure that we have in California. Brook, would love to hear your perspective as well on hydrogen versus EV. And then Alden, I think you just did share what was happening in decarbonization. So maybe Brook, you want to kick us off on that one?
Sure. Yeah, this is a fun one because it's, there's lots of stuff to argue about. I think, I mentioned I started out in fuel cells, so I certainly am a believer in the potential of fuel cells. I think generally they haven't received the level of attention because the economics have just been so much more challenging. You don't have the early applications like you do in EVs that can start to drive the market. And one lesson we've certainly learned over the last 20 years in clean tech is that, when you have a cost curve that's already moving, it just builds on itself like a snowball and gets more and more momentum, drives efficiencies, drives margins, drives costs down. It's how we're at 30 cents a watt on solar. It's how we're, at nearly $100 a kilowatt hour on lithium-ion batteries. Fuel cells just don't have that cost curve, right? Has anyone on this panel ever bought a fuel cell, right? Maybe you at least a Toyota Mirai, that'd be the closest we could get. But generally, there's just not products in the world that have this sort of initial momentum. And from a physics and theoretical perspective, you could make a case for fuel cells, but it's just really hard from a practical standpoint to have early successes that will have businesses that make money. And I've looked at every application for fuel cells, drones and all kinds of things. So that's my general skepticism. It is shifting a little bit. I think there's strong commitment in Germany towards, kind of a more of an ecosystem model. The German government and industry are pretty committed to trying to find some ways to experiment with different approaches. Of course, Nikola going public, that's a pretty big factor. You've got, for a moment there, Nikola was worth more than Cummins. And I think that got some attention at the executive level of those organizations. So it does have attention. There are some experiments being played out. I want to believe. I'm just skeptical. So I think where EVs are going to proliferate everywhere. I mean, I have like 10 EVs in my garage now, and that includes like a boosted skateboard and a scooter and all these other things, right? You just don't have that virtuous cycle yet working in fuel cells, but I hope that it happens.
It's quite a garage.
Okay, now I think everybody wants to go into Brook's garage because it's fun. So maybe I'll talk for a minute about California, and then would love Alden's thoughts on this as well. So California, at first let me say, fuel cells are EVs too. So Alan Lloyd, who's the former chair of the Air Resources Board, once admonished me because I made that mistake too. And he's like, no, fuel cells are EVs. So they're all electric. It's just one is a fuel cell electric, one is a battery electric. And it's undeniable, as Brook said, batteries are ahead. They're ahead of the game. And they were used in electronics, which helped. China helped. There's a lot of reasons why we should be optimistic about BEVs being able to really penetrate, sectors that we never thought they could. I actually never thought there could be a Class 8 battery electric truck. And well, I was proven wrong. So I think that we should be optimistic about battery electric vehicles. But I also think that fuel cell electric vehicles have a lot of advantages in terms of fast refuel time. There's certain duty cycles that would be better for a fuel cell than for a battery electric vehicle. It would be good to have alternatives to batteries in the zero emission vehicle world in terms of just consumer choice and potentially, when we have a power outage, we want to make sure that we have enough fuel to be able to power transportation and meet basic needs. So there's some real advantages to having a diversity of fuels in the zero emission vehicle market. I think California has more fuel cells than anywhere in the world. We have a target of having 200 stations by 2025 that are publicly available. We were focusing wholly on light duty. Now we're turning our eyes to medium and heavy duty, where we think there's a real opportunity and a problem too in terms of being able to quickly electrify. We'll need, I think, fuel cells as well as batteries in the medium and heavy duty space. But we'll need a global transition. And I think, China gives me some hope. There's some work in China on heavy duty hydrogen and fuel cells. And I think if China really made a commitment, that could help build the market, build scale, and drive down prices. We have to drive down prices both on the hydrogen side and the vehicle fuel cell side. I think on the hydrogen side, we're seeing more investment happening, which is really exciting. Germany and other places are looking at hydrogen, maybe more for the power sector than for transportation, but that's it'll drive down prices for hydrogen. So I still think we should be investing in particularly green electrolytic hydrogen and fuel cells with an increased focus on the medium and heavy duty space where we're going to need it.
Okay. So moderators aren't allowed to be controversial, but I'm just going to jump in. I think cost is a factor here, right? So we talked about cost convergence and markets really, I think Brooke said it well, markets grow when you see cost kind of match technology and consumer and fleet desire. And I think it still feels a little ways off on hydrogen, but it's happening. The other thing I would offer up for people to think about is what both Nikola and Toyota have done is bundle fuels with vehicles. And so that concept of bundling is also another way to drive adoption, where your lease payment entitles you to fuel. And so it's a form of getting the vehicle in the hands of customers, but that could be interesting. So let's keep going here. Oh, actually, before we leave sort of the fuel mix question, why aren't people talking about natural gas anymore? Seems like there are some big fleets using it. Seems like RNG and LCFS have really driven lots of activity with some of the more sophisticated fleets. So, Patty, since you're talking about it, what's your take on that?
Well, I do think there's a role, especially in the near term, and I want to focus on maybe renewable natural gas. So we need to make sure that, again, we're making progress on cutting carbon as we move to a cleaner transportation system. From a tailpipe perspective, these low NOx engines are great. And the South Coast, we have places in California that really need it from an air quality perspective. So I do see definitely a role for natural gas and renewable natural gas in the near term to help with air quality problems. I would say for the long term, we're not seeing huge global investment in natural gas vehicles. It's very pocketed investment across the globe. So how are you going to be able to drive down costs? And I don't see it right now. I'd love these investors to tell me otherwise. But when I look at the markets for who has natural gas vehicles, it's like Pakistan and places where there's a lot of natural gas, or places where they're exporting their oil and they want to keep the natural gas so that they're using it. So I don't see the global natural gas investment, but I'd love to hear what the investors think.
Yeah, I don't see it happening either. I think there's some captive markets where it could be interesting. You see like Waste Management and others that have made investments, and so they can capture their off gas and use it in the fleet. And those can make economic sense, but I just think it comes down to fundamental unit economics and efficiency. And you don't get that much efficiency gain with a CNG vehicle. There's some costs, and then you have to invest quite a bit in the infrastructure. And at this point, it's cheaper to invest in electrification infrastructure generally, and you get a meaningful advantage in terms of operating costs. So, in electric fleets, you're dropping operating costs by 80%. You're not getting that same 80% drop with CNG. So I think it sort of was an opportunistic moment for CNG, but I think, they've sort of been lapped by EVs, and I don't see it coming back anytime soon.
So that's a good perspective, and let's keep going because I think we've talked about fuels, and I'd love to give Alden a bit of a chance to talk about what's happening in autonomous, and maybe give us a little bit of historical framework for kind of what's been happening. What do you see happening going forward? We'll get off of fuels because that could derail our entire panel if we wanted to.
Well, I still want to hear more about all the EVs in Brook's garage, but maybe we can come back to that.
That's right.
Yeah, so I mentioned at the top, I think a big part of the story in the technology that we're working on today is about hard-earned experience. And like any new and ambitious technology, including a lot of the battery technologies and other things that were worked on, during the clean tech boom, you learn a lot of valuable lessons from working on those things. And I think the same is true of how automation for vehicles has evolved over the years, right? There are so many people working on these technologies in a variety of different contexts now, a lot of really, really smart folks. I think what we see happening is a lot of the same mistakes being made that were made 5 or 10 years ago. And what I mean by that is trying to do too much and focusing more on the narrative and the trajectory than on what it really takes to build a real product. And so in starting Ike, we tried to do things a little bit differently based on that hard-earned experience. And I won't talk too much about us specifically, but I think, the typical playbook in AV, and this is true in many new technologies, is in order to get investors excited, you need to demonstrate rapid progress. And what often happens when you're doing that is you have to cut corners, you have to, sort of polish off the edges a little bit and try to present something, a time-lapse video or whatever the case may be, to make it look really compelling. And why am I saying that? Because, I've been part of doing those sorts of things before in different contexts. And what you find is you actually just create a whole bunch of technical debt, right? So you can have a great demo, you can have a kind of a cool story to tell, but you're actually further away from building a real product than if you had just sort of done the things you need to do in the first place. The way I tend to talk about this is of an analogy, building a house, right? There's like a lot of opportunities to show a really impressive kitchen with all the features and the running water and all this other stuff, but none of the foundation or the architecture that supports actually having a house that you can live in, right? And so I think the companies that are going to be successful in our space are the ones that have been investing in what I call the invisible work, which is the architecture and the foundation, who are going to, plug the refrigerator in and turn the water on as a last step rather than a first one. So that's sort of the perspective on, approaching building the technology. I think there are so many parallels to, my experience working on clean energy technologies 10 years ago. The same sort of phenomena were taking place, and I think it's valuable to learn lessons from that. The other major piece is where I think hard-earned experience comes in is in Silicon Valley, technology startups especially, they want to try to be disruptive and kind of own everything, right? And there's a lot of focus on verticalization. In other words, we're going to own and build all the stuff. And I think one of the valuable evolutions that's happened over the years in automation is being willing not to do all those things, right? In other words, we are not trying to build our own truck. We think that vehicle manufacturers are going to be really good at building trucks that are fueled in all sorts of ways over time, but that ultimately can drive for 1 million miles and be reliable and safe and very high quality, right? And so that's where I think this is headed to a large degree, is companies are starting to realize that they can't do it all. And in fact, it's pretty valuable to be able to partner. Building trucks is one maybe kind of extreme example. There are very few companies that are trying to go and do that as well. But I think the same is true for the application of the technology. So part of the reason this is a great event for us is Ike is actually focused on deploying technology to fleets, just like a telematics system or any number of other technologies that fleets have adopted over the years. We're not going to be our own fleet, right? We're not going to own and operate a huge number of vehicles. We just made an announcement this week about our first customers, who are very large and sophisticated fleets, and we think they're going to be best at owning and operating these assets as they do today, and kind of applying their expertise and their sophistication to goods movement. So that's our approach. But I think the lesson is that especially as a startup that's venture backed and is going to be really good at certain things, we want to focus on those things as much as possible and not try to go be good at everything. And I think the companies that are going to be successful in the area where we're working are the ones who can kind of learn those hard-earned lessons, learn from previous mistakes, and kind of evolve as so many of these new technology efforts have evolved over time.
Yeah, that's a great perspective. And so what will we be looking for when we see an Ike-enabled AV out there?
Yeah, so we just started talking about this week, so it's kind of good timing. What we're going to be doing is equipping our fleet customers with new technology that enables the truck to drive without a driver, and doing that in partnership with an OEM, right? So fleets will buy a truck that is powered by Ike. That's what we're calling it. And it'll come with new sensors and a very powerful compute and a number of other components that allow the truck to operate safely on the highway. And then the fleets are going to pay us a subscription fee. So this is a lot like a telematics business or satellite radio, if you're familiar with that business model. And what's been so valuable about that is we're able to just plug into the very large networks. The customers we announced this week are Ryder, NFI, and DHL. They're all quite active actually in adopting electric vehicles and a number of new technologies. And for them, this is just sort of another piece of their portfolio to try to make their operations more efficient and productive. So That's a pretty unique approach, right? But it's really about our willingness to say, we're not going to be very good at owning and operating a large fleet of vehicles. We actually think that's pretty hard to do well. And we want to make use of partners who have built up some expertise in doing that. So I'm really excited about that approach. And again, I think 10 years ago, I might not have had the insight, and we collectively as a team might not have been thinking about it this way, but it's a result of, trying a number of different things and working on some different applications of new technologies, and frankly, building some modesty and realizing that, there's a lot of really experienced people and companies out there who we can work with and make more progress together.
Yeah, fantastic. That's exciting. That's exciting. So maybe let me shift gears a little bit, to use a transportation phrase. A lot of us have participated in both consumer-facing transportation, and then now sort of are maybe more recently, or in some cases for a long time, looking at sort of the B2B or enterprise world. And I think a couple of you mentioned this earlier. Can we talk briefly about sort of lessons learned or different perspectives that can be brought from one to the other? Because they are very different. One has 17 to 20 million vehicles a year sold, the other, in the hundreds of thousands. But fleets are a different animal than consumers. And so maybe to just go around the horn a little bit to talk about some of the experiences you all have had on consumer-facing technologies and scaling those versus what you're seeing in the B2B and fleet world. I'll start with Brook, if I could throw that one at you, because I think you've seen both.
Yeah, so we don't view ourselves as consumer-facing investors. We are generally more industrial tech, and so the way we typically think about technology adoption curves is really driven on fundamental unit economics and an economic value proposition. So in EVs, we didn't invest in any passenger EV companies. There's really not a value proposition to buy an electric vehicle today. They're fun. My garage is fun because it's got bikes and scooters and drones and EVs, but it's hard to make an economically rational argument. I know, trying to convince my wife, but to buy more of them, but they are fun, undeniably, and I have my kids on that side of the argument. But we invested in Proterra. That was our first, EV investment, because we knew that buses and heavy duty were going to be the first segment of transportation to go 100% electric. They were the first economically valid value proposition because of the fixed route, the start-stop use case, urban environments with air pollution constraints. All of those factors made them much more economically rational than passenger vehicles. The same rationale we applied to autonomous vehicles, exactly as Alden described. Robotaxis are the fun, exciting thing that people sort of focused on, and Waymo's driving around with no one driving them. But again, the economic value proposition there is much, much more challenging. You can go to long-haul trucking, and it's a very clear rationale from an economic value proposition. You have a shortage of drivers. It's one of the worst jobs you can have. You just sit there for hours. Sitting is like the new smoking. It's horrible for you. These are not good jobs, and it's scary to think about job transitions and jobs going away, but that's one job that probably should go away. And so the economic rationale is clearly there. The other component of that is the technology maturity. As Alden said, the technology is not quite there yet, but it's getting there, and it will get to highways first, because highways are a much simpler domain. Alden can explain this better than I can, but we analyzed all of this, autonomous, market, and recognized that trucks would be an early application that would make a ton of sense. And then we looked at what technology would be critical to enabling that, and one of those technologies was long-range LiDAR. So the only investment we've made to date is in a company called Luminar that we think is pretty unique in their ability to see long range. And what's interesting there is they also can apply that technology to a passenger vehicle application that doesn't have an economic rationale, but it does have a customer benefit, which is highway driving, hands-free, eyes-free driving, which anyone that's ridden in a Tesla knows that autopilot feature is pretty cool. But it's a little scary when you go around turns at 70 miles an hour and you're just not quite sure how far this car can see. We're pretty sure the LiDAR can help with that application. That's the way, I think we've taken lessons learned from the passenger and consumer facing market and then applied them in kind of an economically rational perspective. But it's really great. And I just mentioned those two use cases because it's great when they can both be combined, right? In this case, Tesla's EV, drive, while not being rational, is super valuable, right? And you wouldn't have all these other opportunities were it not for that incredible cost curve to be launched. So we do pay a lot of attention to what are consumers thinking, how are consumers thinking about their own purchasing decisions, and it's impacting companies like DHL that Alden just mentioned. They're thinking about sustainability because ultimately they've got to compete. They have to decarbonize their operations because consumers care, and they're going to pick FedEx versus DHL versus someone else based on their reputation. And I think many big companies are really wrestling with that today. So both sides are important, but that's kind of how we look at both of those trends.
Yeah, that's great. That's great. Patty, anything you would add to that? You see both sides of it from your vantage point.
Yeah, well, I mean, Brook was touching at the very end, which is that, I mean, our theory is that passenger vehicles bring scale. That scale drives down prices. That brings the prices within reach of migrating into the medium and heavy duty market. But then there's a new set of barriers. I mean, I agree that that those players tend to be more rational economically and make decisions based on bottom line. But there are some technological barriers, right? So that's what we're seeing, even like in China, which is the lead market for the world. As the technology migrated to medium and heavy duty, they encountered problems. And that's when they were like, oh, maybe we need fuel cells because we're not sure everything can be fixed. And I would just say that that yes, we, in some ways it's easier to think about these rational economic actors as being a driving force in electrification. But I think there also are new barriers that you're going to face as you try to scale that tech, or you try to migrate that technology to the new sector. I will also say, I mean, to me, what's very interesting about California too is we're home to what Dan Sperling likes to call the three revolutions, right? This mix of autonomy, mobility as a service, and electrification. And you bring those together and you have really, this big opportunity to dramatically cut emissions and change mobility as we know it. And all the companies are here in California. So I would also say in the passenger side, there's this mobility revolution that is just about to hit us. I don't know when. When is Zook's going to actually have vehicles out there moving people around? I don't know. But I do think it will happen. And in the next 5-10 years, I'm not sure, but I think it will happen.
Yeah, it's a great point. And I think both of you touched on this idea of getting the benefit of the scale from consumer markets or preferences from consumer markets. And that's very real, right? So you have commercial vehicle technology companies that are taking batteries from consumer markets because the cost curves are lower and packaging them into commercial vehicles. You're seeing things like that happen. And similar to the AV example, Brook, that you gave, I think that is happening, right? The one thing I think I would add for everybody's benefit here is the beauty of the North American commercial vehicle market is they are very open to taking in outside technology, right? So Alden's company is a great example, right? So if you think about the big commercial vehicle OEMs, there's more of a openness and partnership mentality around new technologies, new powertrains, et cetera. So new AV capability, and that's a real benefit to us here. So. I
might just jump in and add one thing, because I think there's an interesting theme there that we haven't touched on yet, which is the incumbents versus the innovators.
Yeah.
So it's sort of like, how do these ecosystems work? And Alden, you touched on it, perfectly with, what you're going to do, what you're good at, and what the industry is good at. And I just think it's worth just mentioning again in the context of your comment, Sam. We've seen it with some of the largest OEMs, in the world. And I'll just mention one example, which is Daimler. They're the largest commercial vehicle manufacturer in the world. And, we think about, how can we help our companies reach scale, both for themselves and for the industry? How can we accelerate adoption and move faster? And one thing that we've successfully done, and I want to just highlight it as a cool example of how collaboration can work, is we introduced them to Proterra a handful of years ago as we started to realize Proterra was an OEM, they're making electric buses, but by virtue of being first to market, they had to learn not just the EV technology, the battery technology, the drivetrains, but also the system level thinking, the charging infrastructure, the fleet software. You know, how do you tie all these components together? And just like Tesla's advantage now is far bigger than the battery, right? It's the whole system that they've put together that makes the real, you know, technology so hard to replicate. The same is true when you're first to market, and Proterra realized this, and we started to think about providing that technology to other vehicle manufacturers. And it took a while to convince Daimler to take a hard look. You can imagine, you know, the engineering prowess in that organization, having basically invented the diesel engine. Hard to imagine they'd have to look somewhere else, but there were lots of synergies between what Proterra was doing and Daimler. They ended up leading a very big round 2 years ago, and now we've partnered on a few vehicle programs that we've announced, including school buses and garbage trucks. And I think a lot about that as an investor and as a, you know, as a proponent of sustainability. How do we just move faster? And we need to get we have so much might in the industrial world and capabilities, and we can't just throw all that away and try to rebuild it and reinvent it. We have to find ways of, you know, collaborating, and that's the only way we can scale quickly enough. So I just wanted to throw that out there because I think it's really hard to do, and it oftentimes doesn't work. Cultures are so different, but it can be done. And, you know, Alden talked about, you know, his own success. So I think that's the model for scaling and for success for both sides in the future.
Yeah, fantastic.
Can I,
yeah, go ahead, Patty.
One thing really fast, which is one thing we have not talked about is the need for these systems to be resilient. And, you know, we're experiencing this more intensively than everyone in California with power shutoff. And so I would say there's also a lot of room, I think, for both investment and innovation on the vehicle to grid side, on, you know, more resilient charging systems, on making sure that we have ecosystems that are, when the power goes out, are resilient and are able to deliver especially critical services. So I just think there's a lot more investment and work that needs to be done in that space, because as we move towards a zero emission vehicle future, we need to make sure that that's a future that's resilient in the face of these crises.
Yeah, I think both of you made some great points. I do think in the B2B world, in the fleet world, the role of the incumbent, the partnerships with the incumbents are going to drive both resiliency and, to Brook's point, I think faster adoption. I think it's a really salient point. By the way, try hiring a young engineer at Daimler that doesn't want to work on EVs, right? As an example, right? So there is a panel later, I think later this week, on the role of incumbents at ACT. So I have to make a small plug for that, but I think it's going to be a good one, knowing some of the panelists. So I think that's on Thursday. So I've got one, I think, a last question for the group. And I know that in spite of us all being in California, probably within about 30 miles of each other, I'm guessing in total, here we are Zooming. But where do people think are the emerging innovation hubs? Or is there another or a few emerging innovation hubs outside of California? And maybe I'll start with Alden. We'll go alphabetical. Alphabetical first name, sorry, to be clear.
That doesn't happen very often, thank you. Yeah, so I think this is something we think about a lot. We have an investor called Fontanalis Partners that's based in Detroit, that's a transportation focused fund. And it's been fun to get to go out to Detroit and see the incredible resurgence of that city. There are a number of companies now that are emerging there that are working on electric vehicles and working on a number of new technologies. I've kind of fallen in love with Detroit. I say all the time, I think it would be a pretty great place to live. And so that's clearly on the list. From an automation standpoint, Pittsburgh has been a long-standing location for a lot of talent coming out of Carnegie Mellon and elsewhere. And I used to spend a lot of time there in a former role as well. Also a great town. I think the conditions there are quite different in both of those cities than they are here in California, where there's a lot of wonderful things about the Bay Area and Silicon Valley. The cost of living, though, is challenging. At the moment, we can't go outside in Oakland because of the air quality issues. And so my sense is that, and I think this is probably conventional wisdom at this point, but that people are going to be seeking out some of those alternative or historically alternative locations in order to work on these new technologies. And it's going to be really interesting to see how it evolves over the next few years, because I think that could be quite valuable to have people from different backgrounds, especially in different parts of the country, who are able to contribute to these important technologies without having to live in this one 100 square mile area. So I personally spend as much time in some of those places as possible, but unfortunately probably not getting on a plane for a while. So we'll be focused on California for the foreseeable future.
Yeah, great.
Yeah, so I'll just chime in on a couple things and kind of argue two sides of this argument. But one, COVID has accelerated a whole bunch of things that were hard to predict. Of course, people kind of moving out of the Bay Area is one really interesting phenomenon. You see acceleration in other technology trends, adoption of digital automation technologies, is happening at a breakneck speed in supply chain and logistics. That's really fascinating. But the net result of that is, I think people are going to start running experiments that they didn't run before. And one of those is, can I operate my operation remotely? And obviously, for many groups and many teams, that the answer has been yes, we can be just as productive or more productive somewhere else. There's lots of challenges that go along with that. So we'll see if that pattern really persists, because I think for those of us with children, it's not necessarily always true. But I do think there's going to be a lot more just a spread of innovation, right? And we're seeing it in our own fund. Our last investment was actually a company out of Europe. So we're certainly more open, I think, than ever to innovation coming from outside of the Bay Area. But all that said, there's something incredibly powerful about having this combination of academic talent, just raw talent from an academic perspective, and then from a agglomeration perspective, the capital. There's just incredibly tolerant and risk tolerant capital here in the Bay Area, and this culture of taking big chances and going after big swings is hard to find other places. As much as there's been attempts to recreate Silicon Valley other places, it's been pretty hard. So I think it'll still remain a hub, but I think there'll just be more of it elsewhere, is sort of my prediction.
Yeah. Patty, what are your thoughts?
Well, I think there's great examples across the state of California of other hubs. So the Los Angeles Clean Tech Incubator, they actually have this coalition of groups, a lot of EV companies, EVSC suppliers, utilities, LADWP is part of it, and they're, as far as I know, pushing the most aggressive goals in the country on electric transportation. And they're really trying to create this whole ecosystem of investments to support entrepreneurs and to support deployment. So I think that it's not just happening in Silicon Valley, my birthplace, but actually in Los Angeles as well. Because electric vehicles are, I would say, simpler in a lot of ways than internal combustion. They have, sure, 1/10, maybe 1/100 of the moving parts. There's just a lot of opportunity for new companies to spring up in this space. And now that we're looking at a whole suite of mobility and goods movement technologies that are migrating into our ecosystem, I actually think that we'll see a lot of companies across the country flourish.
Yeah, I tend to agree. And certainly from my vantage point, the whole middle of the country seems to be opening up with interesting technology companies that are touching fleets and logistics at EVs. So couldn't agree more. But I think to Brook's point, there is a spirit of innovation and passion and capital, frankly, here that is very hard to match. So, well, look, I think that is about all the time we have on our panel. This was a lot of fun, and I would offer each of you a glass of wine or sparkling water or beer, whatever your preference is for participating. It's been I guess it's morning, so it's maybe a little early for that. But thank you, and thank you to Nate and the team for organizing this, and look forward to hopefully seeing you all in person soon.
Great, thank you.
Thanks very much.
Good job. Thanks, everyone.